Welcome back. Well, the Nifty is holding up comfortably in the green above that mark of 22,200 and close to the highest point of the trading session. So fresh record highs is what we have been scaling, and that really continues. Take a look at Bank Nifty as well, because that was the index that was outperforming yesterday. Today as well, it's holding its ground. There's a good 200-point rally as far as the Nifty Bank is concerned, though from the highs of the day there has been a bit of a slip. IndusInd Bank continues to be in focus. It seems like that entire stake rejig which was expected from Hindujas might happen now. So decks have been cleared in terms of the regulatory approvals. That's what at least the reports are suggesting, and that stock is sitting at the highest point of the trading session. But for now, let's talk about the metals pack as well. Aditya Welekar is joining us from Axis Securities to talk to us about a lot of news flow which has been happening in that sector. Let's begin by Novelis and Hindalco as well. Aditya, were you as surprised with the news flow as the rest of us? And what do you think would be the reason of this, IPO preparation?
Yeah, good morning. So, I think one thing which we suspect is that there is a flare up in the capex at Novelis. So, in the Q3 call, they said that they have increased the capex guidance from 2.5 to $4.1 billion at Novelis, and that escalation was due to the civil and structural work. So initially they estimated a lower capex and then they revised it upward. So they want to keep the net debt to EBITDA, that leverage ratio in the below 3x once they go for an expansion at Bay Minute capex in future. And currently the net debt to EBITDA at Novelis is at 2.7x. And they want to bring it down to 2.5x in Q4. So, in order to execute the capex at a lower net debt to EBITDA at Novelis level, I think, so this is just our speculation that they might be raising this amount in order to fund the capex at Novelis. So that might be one thing, or they might use it even also for further inorganic acquisitions. So it all depends on how they use that proceeds of this particular IPO, and I think that will decide a further course of action for the stock.
What are they trying to achieve out of it? Are they trying to perhaps increase the sum of part valuation of Hindalco, because ultimately Hindalco does not need this cash?
Yes, definitely Hindalco is cash positive and it doesn't need the cash. And if they list Novelis, then yes, it may unlock the value of Novelis, but at the same time, the holding company discount will kick in. So, on a net basis, it is a slightly neutral transaction, but they will be able to raise this cash without raising the net debt, so without raising a leverage. So, we can look it from that perspective that they will be getting cash without disturbing the debt structure. So, and as I said, the funding of that Bay Minute capex will be critical, because they have a strict what they have said that they don't want to exceed 3x. So that we have to see. Definitely means how they use the proceeds will definitely decide that how the stock will perform, and further downgrades or upgrades will be decided on that.
And post this news, have you upgraded the stock, changed the outlook? What have you done at your firm?
See, currently we have a buy rating. We are holding that as of now, but we have to see how we have to get an update from that, how much stake they offload and how many and how they use the proceeds. So that will be very critical. If they use it for keeping their leverage under control and funding the capex, then that is a good news. But if they are using it for inorganic acquisitions in the same sector, then we have to see how competitive that acquisition will be. And if they are using it for somewhere else, non-core businesses, then definitely it will not be received well. So as of now, it is just a speculation. So we have to see and wait, and let us hear from the management if any update from them that how they want to use the proceeds. Based on that, we will take a call on the stock.
I wanted to shift focus away from Novelis and Hindalco to JSW as well, because there was this entire buzz around the Australian coal mine that they might be looking at taking, and JP Morgan on account of that has actually downgraded the bonds of JSW Steel, saying that the valuation seems a bit more expensive. Do you track this one? Any view there, Aditya?
So we don't have it under active coverage, so I can't give a recommendation, but yes, I have. Means the valuation looks slightly expensive for that acquisition of the coal mine. But at the same time, in the long term, they are expanding the steel production up to 50 million tons by FY30, and they will be requiring coking coal integration, and that's a critical material for them. So in the short term, we can see that valuation is not very comfortable, but in the long term, if we think that raw material integration is critical for the company, so from that perspective, I think it is okay.
So your mind is the real underlying value of a Novelis, because that becomes the benchmark. I mean, if it lists at 8, then it will have impact on Novelis stock. If it lists at 12, it will have impact on Novelis stock. Do you think that's the number to watch?
Yes. Currently, the street, or at least we were valuing it at 5.5x of its 1 year forward EBITDA. So if it unlocks and if the street values it at, say, more than 6.57x, then there will be some premium which Novelis listing will fetch. So that means we have to wait and see that how much valuation the company fetches. As of now, from our calculation, $12 to $13 billion. If they clock in $2 to $2.2 billion of EBITDA, then at 6 to 6.6x, that much amount of valuation we are expecting. But if the market goes ahead and use it a higher valuation, then definitely that will be a positive.
Well, appreciate your time. So glad you could join us with your thoughts. Markets, meanwhile, Nifty is just not going anywhere. There's just no energy in the market. Not as much. Not surprised with what's happening there. Kamal Singhal, Managing Director and CEO of Urban Smart Spaces, joins us now.